ExamPrep.School. Massachusetts Producers Exam for Limited Lines Credit Insurance. Exam code SERIES 16-59. There are 5 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Consumer Credit Insurance Basics, General Insurance, Insurance Regulation, Types of Consumer Credit Insurance. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following actions must a Massachusetts resident complete first when seeking an initial producer license for limited lines credit insurance? A. Submit a completed license application to the Massachusetts Division of Insurance. B. Complete the state-approved pre-licensing education course for the specific line of authority. C. Pass the Massachusetts licensing examination for the specific line of authority. D. Submit fingerprint-based criminal background check information to the Division of Insurance. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is that completing the state-approved pre-licensing education course is the initial requirement prior to taking the exam and submitting an application to the Division of Insurance. Reason A is not correct. Submitting the application comes after completing education and passing the exam. Reason C is not correct. Passing the exam cannot occur before fulfilling the pre-licensing education requirement. Reason D is not correct. Fingerprint submission is required later in the process, not the first step. Question 2. Under Massachusetts General Laws Chapter 176D, which of the following practices is classified as an unfair or deceptive insurance act? A. Misrepresenting the terms or benefits of an insurance contract to induce purchase. B. Issuing a policy form that deviates from the text on file with the commissioner. C. Marketing group credit life insurance through an employer-sponsored plan. D. Refusing to underwrite an application solely based on the applicant's gender. The correct answer is A. The correct answer is misrepresenting policy terms or benefits, as Chapter 176D specifically defines false or misleading statements to induce purchase as an unfair or deceptive act. Reason B is not correct. Deviating from a filed policy form violates filing requirements but is not categorized under deceptive practices in Chapter 176D. Reason C is not correct. Marketing group credit life through employers is a permissible distribution method and not a deceptive act. Reason D is not correct. Underwriting decisions based on gender constitute discrimination, not deceptive misrepresentation under Chapter 176D. Question 3. Under the Fair Credit Reporting Act, consumer reporting agencies are required to maintain procedures most likely to ensure which of the following outcomes in credit transactions? A. That consumer reporting agencies disclose to consumers every credit inquiry appearing on their credit reports. B. That consumer credit reports be updated at least quarterly with newly reported account information. C. That consumer reporting agencies remove all adverse entries from credit reports after 7 years. D. That consumer reporting agencies maintain procedures ensuring maximum possible accuracy and fairness of credit reports. The correct answer is D. The FCRA specifically mandates that consumer reporting agencies adopt reasonable procedures to achieve the maximum possible accuracy and fairness of consumer credit information, thereby protecting both consumers and lenders in credit transactions. Reason A is not correct. This choice focuses on credit inquiry disclosure rather than the FCRA's core requirement of accuracy and fairness in report contents. Reason B is not correct. This choice incorrectly imposes a quarterly update requirement, which the FCRA does not mandate for credit transactions. Reason C is not correct. This choice confuses removal timing rules with the FCRA's fundamental accuracy objective rather than its core procedural mandate. Question 4. Which type of risk exposure involves potential financial loss arising from an insured's legal obligations to compensate third parties under claims or lawsuits? A. Property exposure. B. Net income exposure. C. Liability exposure. D. Credit exposure. The correct answer is C. Liability exposure refers to the possibility of financial loss when legal obligations require the insured to pay damages or settlements to third parties. Reason A is not correct. Property exposure pertains to damage or loss of tangible assets, not legal claims against the insured. Reason B is not correct. Net income exposure relates to potential loss from business interruption and reduced earnings, rather than third-party liabilities. Reason D is not correct. Credit exposure concerns the risk of non-payment by borrowers, not obligations arising from liability claims. Question 5. An insurer incorporated in Ontario, Canada, that has received a certificate of authority to transact insurance business in Massachusetts is classified under Massachusetts law as which type of insurer? A. Admitted foreign insurer. B. Admitted alien insurer. C. Foreign non-admitted insurer. D. Unauthorized alien insurer. The correct answer is B. This insurer is incorporated outside the United States, making it an alien insurer. Because it has obtained a certificate of authority from Massachusetts, it is admitted. Therefore, it is classified as an admitted alien insurer. Reason A is not correct. Classifying as a foreign insurer implies incorporation in another U.S. state, but this insurer is incorporated outside the United States. Reason C is not correct. Non-admitted indicates lack of a certificate of authority, but this insurer has been authorized to operate in Massachusetts. Reason D is not correct. Unauthorized indicates no certificate of authority, but the insurer has obtained one, so it is admitted. Question 6. Which of the following is not considered an essential element of a legally enforceable insurance contract? A. Legal purpose of the contract. B. Competent contracting parties. C. Contractual consideration. D. Insurable interest requirement. The correct answer is D. The correct answer is insurable interest requirement, because although insurable interest is a necessary prerequisite for an insurance policy, it is not one of the 4 core elements: agreement, consideration, competent parties, legal purpose, of a legal contract. Reason A is not correct. Legal purpose of the contract is a foundational element, ensuring the contract's objectives are lawful. Reason B is not correct. Competent contracting parties is a required element, confirming that parties have legal capacity to contract. Reason C is not correct. Contractual consideration is an essential element representing the exchange of value between parties. Question 7. In a credit insurance arrangement associated with closed-end consumer installment loans, all 3 named parties have distinct roles. Which list correctly identifies these parties? A. The debtor, the creditor, and the insurer. B. The creditor, the insurer, and a separate policyholder. C. The debtor, the insurer, and the producer agent. D. The debtor, the creditor, and the lender. The correct answer is A. The contractual parties are the insured debtor, the creditor serving as policyholder, and the insurer underwriting the credit insurance. Reason B is not correct. That choice incorrectly distinguishes the policyholder from the creditor. The creditor itself is the policyholder. Reason C is not correct. A producer agent facilitates sales but is not a contracting party in the insurance policy. Reason D is not correct. Listing both creditor and lender duplicates the same role and omits the insurer entirely. Question 8. Under a group credit insurance policy covering multiple individual debtors, which entity typically serves as the policyholder? A. The issuing insurer. B. The state insurance commissioner. C. Each individual debtor. D. The financial institution extending credit. The correct answer is D. In group credit insurance, the institution extending credit functions as the policyholder and negotiates the master policy covering its debtors. Reason A is not correct. The insurer underwrites the policy but does not hold the policy. It contracts with the credentialing institution. Reason B is not correct. The state insurance commissioner regulates but does not hold or execute the policy. Reason C is not correct. Individual debtors are insured under the group policy but are not the policyholder. Question 9. What is the primary purpose of issuing a certificate of insurance to a debtor under a group credit insurance arrangement? A. To serve as the master policy for coverage. B. To verify the creditor's authority to collect premiums. C. To furnish the debtor with a proof of coverage under the group policy. D. To authorize the insurer to adjust the debt balance. The correct answer is C. The certificate provides evidence of coverage and summarizes key policy terms for the insured debtor under the group credit policy. Reason A is not correct. The master policy is held by the creditor, not issued directly to the debtor as a certificate. Reason B is not correct. Collecting premiums is managed via the creditor. The certificate is not for verifying premium authority. Reason D is not correct. Debt adjustment authority is separate from the insurance certificate's function. Question 10. Which of the following best defines closed-end credit in the context of consumer installment lending? A. Credit extended for a fixed amount that must be repaid in installments according to a set schedule. B. Credit provided on a revolving line with variable balances. C. Credit with flexibility in repayment dates and amounts. D. Credit secured by collateral that permits periodic increases in the loan amount. The correct answer is A. Closed-end credit is defined as a single advance for a specified amount that is repaid in installments according to a fixed schedule. Reason B is not correct. Revolving lines with changing balances describe open-end credit, not closed-end credit. Reason C is not correct. Closed-end credit has predetermined repayment dates and amounts, not flexible terms. Reason D is not correct. Periodic increases describe open-end or revolving credit, whereas closed-end credit is for a fixed sum. Question 11. Maria regularly uses her credit card for purchases. She pays off part of the balance each month but continues making charges up to a set limit. Which feature best illustrates an open-end credit arrangement? A. Borrower repays loan amount in fixed monthly installments until fully repaid. B. Lender requires collateral to secure credit and charges a fixed interest rate. C. Borrower can borrow up to a maximum limit and repeatedly redraw as payments reduce the balance. D. Account balance is due in full at the end of a 30-day billing cycle or subject to default. The correct answer is C. The correct answer explains that open-end credit allows the borrower to repeatedly access funds up to a preset limit as the balance is paid down, which is the defining feature of revolving accounts. Reason A is not correct. Describes installment credit, which requires fixed payments until the balance is fully paid and does not allow repeated borrowing. Reason B is not correct. Involves secured credit and a fixed rate but does not capture the revolving nature of open-end credit. Reason D is not correct. Refers to a charge card requiring full payment each cycle, not a revolving credit line. Question 12. Luis is comparing two credit products. One requires equal monthly payments over a fixed term to repay the entire balance, while the other allows customers to carry a balance and make minimum payments each month. Which of Luis's examples describes installment credit? A. A loan requiring fixed monthly payments over a specified repayment period. B. A credit account where balance can be revolved and only minimum payments are due each month. C. A line of credit secured by a home and repaid in full on demand. D. A charge card where the full balance must be paid at the end of each cycle. The correct answer is A. The correct answer depicts installment credit by specifying a fixed payment schedule over a set term, which contrasts with a revolving arrangement. Reason B is not correct. Describes revolving credit, which allows the borrower to carry a balance and make minimum monthly payments. Reason C is not correct. Refers to a demand line of credit secured by property rather than fixed term payments. Reason D is not correct. Describes a charge card requiring full payment each cycle, not equal installments. Question 13. In group credit life insurance, which of the following best defines the master policy? A. The certificate of insurance issued to each debtor, evidencing coverage. B. The individual policy issued directly to each borrower under the credit plan. C. The contract between the creditor and debtor that outlines the loan repayment terms. D. The agreement between the insurer and creditor establishing coverage terms for certificate holders. The correct answer is D. The master policy is the agreement between the insurer and the creditors that sets forth the terms and conditions of coverage for all certificate holders under the group credit insurance arrangement. Reason A is not correct. Describes the certificate of insurance, not the master policy. Reason B is not correct. No individual policy is issued to each borrower in a group credit insurance arrangement. Reason C is not correct. Describes a loan agreement, not an insurance contract. Question 14. Under a group credit insurance plan, evidence of insurability is required when a debtor A. Elects coverage within the guaranteed issue amount during open enrollment. B. Requests a coverage amount exceeding the insurer's guaranteed issue limit. C. Is automatically enrolled under the master policy without application. D. Enrolls in the group plan for the first time within the initial eligibility period. The correct answer is B. Evidence of insurability is required when a debtor requests coverage above the guaranteed issue limit, because amounts within the guaranteed issue are approved without medical or financial underwriting. Reason A is not correct. Coverage within the guaranteed issue does not require evidence of insurability. Reason C is not correct. Automatic enrollment does not trigger additional underwriting requirements. Reason D is not correct. Initial eligibility enrollment during the guaranteed issue period generally requires no evidence of insurability. Question 15. Which underwriting feature distinguishes group credit insurance from individual credit insurance? A. Underwriting based solely on each member's personal health and financial history. B. Reliance on pooled group mortality and morbidity experience for risk classification. C. Mandatory medical examinations for every participant regardless of group size. D. Individual credit score assessment for setting premium rates. The correct answer is B. Group credit insurance underwriting relies on the pooled mortality and morbidity experience of the entire group rather than individual assessments, whereas individual coverage requires personal health and financial underwriting. Reason A is not correct. Describes individual underwriting, not group. Reason C is not correct. Group plans do not require medical exams for every participant. Reason D is not correct. Credit score assessments are part of individual underwriting, not group rating. Question 16. Decreasing term credit life premiums are calculated based on which of the following? A. The original loan amount at inception. B. A fixed face amount regardless of outstanding balance. C. The remaining principal balance on the loan at each premium period. D. The total interest expected over the loan term. The correct answer is C. Premiums for decreasing term credit life coverage are computed on the outstanding loan balance at each premium date, reflecting the decreasing face amount as the principal is repaid. Reason A is not correct. Original loan amount applies to level term, not decreasing term. Reason B is not correct. Face amount decreases over time and is not fixed. Reason D is not correct. Interest over the term is not used to determine decreasing term premiums. Question 17. A borrower holds a credit life insurance policy on a revolving $2,500 medical loan. The policy states that premiums each month are based on the monthly outstanding balance. For June, the balance was $2,200 at the start and $1,800 at the end of the month. Under this plan, how is the June premium most likely calculated? A. Monthly rate multiplied by original $2,500 loan amount. B. Monthly rate multiplied by a $2,000 average balance. C. Monthly rate multiplied by $1,800 end-of-month balance. D. Monthly rate multiplied by remaining term in months. The correct answer is C. The correct answer is that the premium equals the monthly rate multiplied by the ending monthly outstanding balance. Since this plan bases premiums on the borrower's balance at the end of each billing cycle. Reason A is not correct. This option incorrectly uses the original loan amount instead of the outstanding balance. Reason B is not correct. This option relies on an average balance calculation, which is not used under a monthly outstanding balance plan. Reason D is not correct. This option references remaining term, which is irrelevant for monthly outstanding balance premium calculations. Question 18. A small business offers group credit disability coverage and pays the entire premium for every eligible employee without any payroll deduction. According to the plan's funding structure, what type of group coverage does this represent? A. Contributory group coverage. B. Non-contributory group coverage. C. Voluntary group coverage. D. Experience-rated group coverage. The correct answer is B. The correct answer is non-contributory group coverage, in which the employer pays all premiums and employees make no contributions. Reason A is not correct. This option is incorrect because contributory coverage requires employee premium contributions. Reason C is not correct. This option is incorrect because voluntary coverage allows employees to opt in and contribute. Reason D is not correct. This option is incorrect because experience rating relates to claim experience, not premium sharing. Question 19. A finance company issues a credit accident and health policy with a 30-day grace period for premium payments. A scheduled payment due on July 1st is not received until July 20th. What is the primary purpose of the grace period in this context? A. To penalize the policyholder by delaying coverage. B. To allow the insurer to recover administrative costs. C. To prevent a coverage lapse while a payment is late. D. To adjust future premium due dates. The correct answer is C. The correct answer is that the grace period prevents a coverage lapse when payment is late, ensuring continuity of benefits during that additional time. Reason A is not correct. This option is incorrect because grace periods are not punitive but protective. Reason B is not correct. This option is incorrect because the purpose is not administrative cost recovery. Reason D is not correct. This option is incorrect because grace periods do not alter future due dates. Question 20. A credit life insurance policy has been in force for 3 years, and the applicant initially misstated their date of birth. Which provision now restricts the insurer's ability to void the policy based on that misstatement? A. Incontestability clause. B. Insuring agreement. C. Grace period provision. D. Assignment endorsement. The correct answer is A. The correct answer is the incontestability clause, which prevents the insurer from contesting application misstatements after the policy has been in force for a specified period, typically 2 years. Reason B is not correct. This option is incorrect because the insuring agreement defines coverage but doesn't limit contestability. Reason C is not correct. This option is incorrect because the grace period relates to premium payments, not misstatements. Reason D is not correct. This option is incorrect because an assignment endorsement addresses transfer of ownership. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.